A 50-year mortgage. Yes, let's talk about it. That is something that the Trump administration um, has and his team are buzzing about. Like it's a golden ticket to home ownership. But as a real estate broker and a professional, I want to give you my opinion and some pros and cons, okay? Let's first slow down for a second because while a 50-year mortgage might sound like an affordable dream, and I know it does, instead of the normal 30-year fix or 30-year term to pay back a mortgage, they're saying 50 years. But think about it. It could actually turn into a financial nightmare if you don't understand what's underneath it. Okay? So, let's just see what the whole deal is. We know that the American dream is what? To own a home, right? But let me ask you this question, family. Who makes up these dreams? Who makes up these dreams for you? You make up your own dream. So just because we have been told the key to happiness in America is owning a home with a white picket fence and having 2.5 children and blah blah blah, I want you to understand that right now we need to deconstruct everything we have been taught as Americans about finance, housing, even church, God, all of that. Because the truth is, many of those who put these American dreams in place weren't thinking about people that look like me, and many of them look like you. Okay? And the American dream, as you want to call it, should be affordable. It shouldn't make you feel guilty. It shouldn't make you feel anxious and broke. So, with this 50-year mortgage possibility, yes, it gives you 50 years to pay up on your loan. But let's jump into it. The most common term, like I said, is a 30-year fix, sometimes 15 years. So this proposal will stretch that payment an extra 20 years, you all. So the logic is this. Longer loan means a smaller monthly payment. But let's break this down, okay? Let's say your monthly payment for a $400,000 home is $2,300 a month, okay? $2,300 a month on a 30-year loan. A 50-year loan, your monthly mortgage would be only $2,000. At 30 years is $2,300, and a 50-year is $2,000. That's only a $300 difference. You might be saving $300 a month, but do you understand that when you get a mortgage, you're paying not only your principal, which is the cost of the loan or the property, but also the interest, the amount you're paying the bank or the lender for financing it for you? So think about it. You're paying almost double for your house if you get you a 50-year mortgage. Now, let me fall back. Some of you might be saying, but $300 extra a month, hell, that's great. Yes, but think about it. Is it worth another 20 years plus another almost $400,000 on interest? And again, I'm a real estate broker. I want you to buy a house. I want you to buy land and investment properties. Hell, because I want to eat, you know, but I also care about you. And that's how a lot of people, especially black and brown people, lost their homes during the great housing crisis in 2008 because these banks were targeting black and brown people and giving them bad loans. Meaning they would approve you for an ARM loan. An ARM is just what your arm does. It goes up and down, right? So at the first 5 years or the first 3 years, whatever terms your bank or lender approves you for, they may say, okay, your interest rate is what you pay, right? The bank or the mortgage company for them lending you the money. It's also, your interest rate is based on many things. It's based on your credit score, your lending history, your income, and also the Federal Reserve and any of those who set the interest rates. So let's say back in 2006, these banks were writing bad loans and approved black woman Angela for a $700,000 house in Waldorf, Maryland at 3%. And that's like, yo, that's great. But that 3% is only going to be for 3 years. And then just like you can raise your arm, the arm loan goes up double. Now it's 6%. So let's do some math. Let's do some math. If your mortgage, your interest rate was 3%, and you're making a payment, it's fine. You're like, hey, $3,000 a month. That's great. Yeah, I got that. But then within the end of those 3 years, your income has not increased. Matter of fact, maybe you had a financial setback, but now that arm raised and now your mortgage is double. That is how you lose your home. So that is why I always tell clients, when you purchase a home, yes, it's best if you can get a fixed rate loan. That way you know every year what it's going to be. Now you have the opportunity to refinance. And I can do a whole different video on what that means to refinance. And that's what many people are saying. One of the pros to this 50-year loan is just get the 50-year loan. And then once in a year or two, or if the interest rates get better and your credit score and you get more money, refinance for a shorter term. But be honest, how many times do many people ever do that sometimes? Now, it's always wise to refinance with the rates. For example, I'll give you a little personal business. Back in, when was it, 2021, 2020? I don't know when that was, when the market was great. Maybe 3 years ago. Houses would go on the market at 10, and I'd have about 12 offers by 2. And the interest rates were like 2 something. So, of course, my spouse and I, my husband and I, we refinanced because it was under 3%. It was great. You understand? But it's a fixed. So, we know every month this is what we're paying. All right. So, like I did before, we did the breakdown. Here's what they're not telling you about this. The lower monthly payment comes at a massive cost over time, you all. On that same $400,000 home, you could end up paying an extra $350,000 to $400,000 in interest by stretching it out to 50 years instead of 30. Your home was appraised and you bought it at $400,000. You extend this loan, and think about it. You say, okay, I'm gonna get a 50-year loan. You're already 40. In 50 years, you'll be 90. Lord willing, and the creek don't rise, you'll still be alive. But if you're not, you're passing that debt to your children or whoever your heirs are. Unless you got mortgage insurance, you got something going on. Do you understand? I'm going to be honest with you. I think this is a way for the banks to get richer. This is another way that our president is looking out for corporations. He's not thinking about middle America, the average Joe who cannot afford this. Yes, we know the housing market has slowed down because interest rates are so high. Many people have been laid off, incomes, a lot of things. But I also know that if I lend you $400,000 and every month I'm getting a lot of interest from you, I'm getting richer. And these banks and these corporations, they want to get richer. They're greedy. These are fat cats. And that's what they want. Now, again, many of you've fallen into this, but the American dream, I want to own a home, and people make you feel guilty if you don't own a home. And again, I'm a real estate broker. I want you to own a home for two reasons. One is because I like to see people happy and accomplish their dreams. But 2, I like to make money. But however, maybe owning a home right now is not best for your finances. And who said that the American dream is always home ownership? We can rewrite the American dream. For many years, the American dream for many white folk was to take the natives' land, the Trail of Tears, enslave Africans, don't give women the right to vote. Do you understand what I'm saying? We as Americans, you, my friend, you have the right to rewrite that dream. So your dream for this season might not be to purchase a home. Now, for some of you, you've been renting too long. You got the money. You just scared. That's a whole nother video for another day. But I don't want you all to be rushed out here because you keep hearing all these people tell you, yeah, when you rent, you're just throwing your money away. And in many cases, yes, you are. But hell, we got to do what we got to do. Right? If you can't buy your car right out, we still leasing it, or we're still paying monthly payments. Somebody else is going to get rich off of our backs one way or the other, but we have to do what's best for our present situation. Okay? I'm going to stop this video here at part 1 and pick up next for part 2. Thank you. And if you like this, continue to like, share, and subscribe. And buy me a coffee if you really enjoy my teachings. All right. Bye.